Good morning, traders around the world. Good evening, good afternoon, wherever you are. Welcome to Trading Capital Markets, where we trade live every day from 9:30 to 10:30. We trade ICT concepts in a scalping style. So on the 1 minute chart, in and out. Most trades don't usually take more than, I don't know, anywhere from 3 to 15 minutes. And yeah, we do it fast paced and precise. All right, let's share the screen. We are all 1 minute past open. Let's share the screen. Awesome. So this is the opening candle right here. And here we go. So we're trading the 1 minute. All right. Okay, so currently we're in this leg right here, since we didn't take the top or the bottom. I like to trade break in market structure, usually. Break in market structure and a fair value gap uh, at that break in market structure. So for me, this is all untradeable price action. Like it doesn't follow my model. So basically, what we would be waiting for, all right, is this. Let's go do some market structure quick over here. Me, for it to be a market structure break, the bodies have to close below. Okay, the bodies have to close below the wick. So from this high to this low, and to this high, and to this low, and to this high. It's a bit zoom in right here, into this low, into this high, into this low, into this high. Okay. So right now we're currently in this price leg. This did not pass. and there was a wick, probably. Yeah, it's a wick. So the bodies didn't even pass this. But for the moment, we're still in this price leg because um, we have a chance to break this, go higher, but stop before and come back down, make a new low. So therefore, um, as long as we don't make a new low, it will not confirm that we're out of this price leg. So that's going to be the market structure shift for me. Well, the continuation in this case, if it goes lower, and the shift would be a above this, a break and hold above this. Well, break and a full body break and close above this. Just gonna take my mic a little bit further from my mouth. So this is a balanced price range, guys, right here. Up, down, and this fair value gap. So if this fair value gap, let's say, is formed and is completed and leaves a little gap over here, okay, it doesn't. But if it ever would have had formed within this leg and closed below over here, I wouldn't count that as a first presented fair value gap. If you guys want to know the terminology I use to trade, I am I'm probably going to start linking the channel that I got it from in the comment section because he is a master at his craft and he helped me a lot. So shout out to Michael J. Huddleston, the ICT, the Inner Circle Trader. If you go on his channel, um, go on the playlist and go core content 2016 and build your way up from there. It'll change your life in trading. So you see this balanced price range, another balanced price range. So here, as long as we do not break below this, I'm not taking shorts. Any economic news later in the day. Up, 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 up. 30-year bond auction later at 1 o'clock. And we have a bunch of Federal Reserve people speaking and FOMC members speaking also. But for the rest of the day, it's pretty clear. So this is, again, as I told you guys, it's in another price range. So this fair value gap, if it's completed and it stays open, so from this wick to this wick, let's go in. Let's zoom in. Let's draw it out for you guys. From here to here, it's in a balanced price range, right? So double balanced price range. All right, it completed. So we'll keep this, and this is going to be in purple because first presented fair value gaps. I'd like to keep them in purple. So let's say if we break below this, right? We break below and full body close below this candle, this wick. I might use this as a premium array and short in this first presented fair value gap with stops right above here. All right, so we broke below. Now we're going to close below. We have closed below. Great. There we go. It's under a little, oh, and that one is officially canceled. It's probably an indicator that does them, but I like to do them manually. And that I'm talking about the fair value gaps. So I think I will use this as a short if we reach back into it. Over here we have a volume imbalance. And that's going to be in blue. Interesting how this candle just closed on the consequent encroachment of that volume imbalance. Probably going to take this now, this high. Yep. And let's go short over here. Like we said, that with a stop above here. Oh, I have to zoom out. That was a stop above here. And probably a take profit. Right here. Actually, let's go for 2 to 1. Now giving a little haircut. Actually, I'll go right above here because that's the leg. So that was the retracement, didn't break. This thing you went, so that's the leg from down, up to down. I'd like to see a close below black over here. Close down. Let me just take off this order, trading, executions. Make this screen a little bit clearer. And below. Wait, if you go price action from this leg to this leg to this leg to this leg, stop should be above here. But I think people are going to be selling off all the way until this fair value gap. It's bigger fair value gap. Let me zoom out a bit on the 15-minute. $15-minute didn't break below. It broke, but bodies didn't close below the wick. Five-minute either. Interesting. Okay, so yeah, we're probably going to take this loss right here. And we'll readjust our trade. Just come back down here. Yeah. It's quite interesting. 9:30 candle. Open, taken, reversed. And now we're going to be in profit. Okay. You know what? Probably, yeah, we're probably gonna have a full range candle coming all the way back up. Yeah, I thought so. Okay, this is getting nice. Came back. Now this is a balanced price range. Should come here. All right. Let's see if we could close below this. All right. Oops. Fair value gap, which we could not for the moment. I think there is a possibility we will. Okay. So there's this volume imbalance that we had when we were zoomed in right here. Come close above here. 30 seconds. Let's go. Great. Interesting. We're closing above the 50% consequent encroachment of this candle. Let's see if we could break through it. Break and close below this fair value gap. Yeah. Okay, I'm now going to draw my stop. Since I'm not feeling this trade really anymore, I'm just going to trail my stop 0.05% in profit above this candle's high. It did break below. If it closes above, it's fine. I'm going to be looking for a break below here. Just a little smidgen above. There you go. All right. I like what it's doing for now. All right, let's trail the stop to this one, 0.1%. Just a little bit higher right here, 0.1, 0.12. And if it takes us out, even better, because I wasn't feeling it. It wasn't explosive enough for my liking. And oh, I thought we would almost be taken out, but we were not. Okay. Wow, it's moving right here. I usually trail to the last down candles high, my stops. There you go. Now let's trail to this high. Is that to that high or a bit over it? A bit over it. Perfect. So I'm at 0.24%. That's active risk management. So already I wasn't liking this trade because it passed above the first presented fair value gap, then used the lower portion of it as a barrier, and now it's continuing lower. So I mean, turned out to be my favorite, but I wasn't liking it, so that's why I'm protecting myself. I was supposed to move my stop right here and get stopped out, but I wasn't fast enough. So let's keep it above there. I like it to get a little bit heavier right here, like right now. There you go. Now we're talking. Trail the stop to this high, 0.32% profit. Our goal is to make 1% today. We're at 0.7 right now, which is pretty good. 0.8, 0.9, 0.94. Come on, give him the beans. Give him the beans. So yeah, it's boring, but trading's supposed to be this way. Sometimes you throw little words of encouragement for the trade. if you feel like it. But all right, now we trail above this high, which is 0.64. Is it above the high? It's above the high. Perfect. And it took us out. All right. So we secured more than 0.5% in profit for this trade, which is fine by me. And that's how you actively manage risk when you're in the trade. All right. If you don't like the trade and you're in profit, just put yourself break even. Don't even give yourself that hassle of stressing over a trade that you think is not good, like I did this morning. So I didn't like it. It passed over my the first presented fair value gap. I would have liked it to take to use this as a zone of reversal, resistance, and come back down. It didn't. So therefore, once this candle closed black, I put my stop loss above this candle, this down candle's wick, my trailing stop, and then I moved it gradually to each candle's high and got stopped out at this candle's high. Let's put that on the chart for you guys to see. We trade simple over here. Trade simple, use good risk management, and that will get you far. But it does take a lot of, how do you say, um, maturity. It does take a lot of maturity. So our stops were above this high right here. Our targets were below, but at least we secured a 1.5 to 1. Not full 2 to 1, but still good. So from here, right there, to right here. How many points is that? Let's see. 652, 90 points. It's a 90-point move, and 90 point is amazing. So that's the first trade, and we're going to be trading on a $15 million account. So I'm going to be increasing the size from here. That was just one lot. We're demo trading on a $50 million account to get used to the numbers. Once we get used to the numbers, it's just a thing of scaling, getting bigger, and just being used to what you're seeing on the chart. Nothing changes, just numbers. Where you enter, where you exit remains the same. So yeah, I hope you guys enjoyed this live trading. Like and subscribe. And we're out here live every day from 9:30 to 10:30 about. Today is good. We're out at 10:06, and that's how we like it. Like that, you could have the rest of the day to yourself and do whatever the fuck you want, basically. So yeah, enjoy your day, boys and girls, traders around the world. This is Trading Capital Markets. We're out.